This is Business. I am Yemisi Business. South Africa's organized private sector has called on the leadership of the country's ruling party to address unemployment and inequality, believed to be responsible for the latest wave of xenophobic attacks. Chief Executive of the South Africa Chamber of Mines, Becky Sibiya, said job creation in Africa may be in jeopardy if the attacks are not stopped. Thebe Ikalefeng of the South African Tourism added that more attention should be paid to African integration.
Organized business cannot operate in an environment of violence and in an environment of xenophobia. And therefore, we're saying no to xenophobia and better to the integration of the foreign nationals or our neighbors, African neighbors, into our communities. If they do better in some things than ourselves, we need to be saying, let's learn from them, let's emulate them, and let's put those lessons into practice.
The one thing that I probably want to say that post all this, when it happens, the two things that we probably should do, which happens in other African countries, is to celebrate 25 May, perhaps if as a national holiday, no longer just as a day in our calendar. But the second most important thing that happens just across the border from Namibia and all the other African countries where are working, is they sing the the African Union anthem. It should be legislated in all these other schools around the continent, because what that does is it helps to reinforce the conscientization and association with the broader African continent.
A London-listed Mozambique mining firm, Kenmare Resources, has sent back home more than 60 workers at its titanium mine in Mozambique. Kenmare said the workers were sent home to protect them from revenge assault that could befall South Africans working in the southeastern country. Kenmare became the second company to send its South African workers home after Sasol, the Johannesburg and New York listed petrochemical giant, which sent 340 of its workers home last week. Kenmare said its operations at its Momo mine would continue without any major trouble if the situation is resolved. The International Monetary Fund says Egypt has a good plan to reduce the budget deficit that should be carried out in parallel with working on boosting the growth rate and creating more jobs opportunities. IMF Chief of Mission in Egypt, Christopher Jarvis, said the country's new policy will help to reduce the budget deficit and improve the balance of payment, as well as contribute to promoting growth and creating more jobs. He lauded the Central Bank of Egypt's policies aiming at having more flexibility of the exchange rate. Zimbabwean President Robert Mugabe has reversed the scrapped annual bonuses for workers with immediate effect. Last week, Zimbabwe's Minister of Finance, Patrick Chinamasa, announced that the government will not pay annual bonuses to civil servants for the next 2 years because tax revenues were dwindling. Mugabe said Chinamasa's decision was null and void and that civil servants will get their annual bonuses usually paid in November. Zimbabwe devotes $260 million to wages every month, but has not been helped by poor tax remittances. More Zimbabweans are in the economy's informal sector where they do not pay taxes. This makes continuous payment of bonuses an unproductive duty for the government. Zambia's cabinet has announced an increase in royalties demanded by mining firms for open cast and underground mining at 9%. The government has also decided to price corporate income tax on mining corporations at 30%, and the mineral managing will cost a tax of 35% when the law takes effect on July. The President, Edgar Lungu, hopes that the changes will promptly eliminate market anxieties in the mining sector and forestall any potential instability. Last year, Zambia proclaimed a brand new mining tax system that required open pit mines to pay about 20% royalty on their profits from the initial 6%. The new tax system worried investors, forcing firms to cancel expansion projects valued at $1.5 billion. African markets closed mixed on Tuesday. Their trade patterns followed low order that came from investors who were reluctant to carry huge loads. Starting with the bulls in Kenya, it closed on the green as the all-share index was boosted by 9 basis points. The Kenyan has only come out of negative trade after the recent attacks by terrorists. The market in Botswana ended in the positive zone as investors stayed on some blue-chip firms. Financial stocks were attractive. In Mauritius, the bulls closed in the red, losing nearly 5 basis points from the main index. Analysts linked weak trade to low flow of funds. The Nigerian market closed in the negative zone as more than 200 basis points were marked down the index. Stockbrokers linked the market behavior to profit-taking. Oil prices are down again in the global market following low demand for energy sources by many Asian firms. At the London market, the Brent trades low at $62 per barrel. Analysts say that supply level remains huge as many producing nations struggle to earn more income. For the OPEC crude, the price drops to $59 a barrel. And that's all in business at this hour. I'm Yemisi Business. Sports is next after the break. Stay with us.